Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. The title of this video is how to trade in December like a pro. We are in the month of December 2014. And the time in London is 1 minute past 11 a.m. in London and 1 minute past 6 a.m. in New York. How one can trade in a month of December, all right? Very often, a lot of traders, will trade until the end of the year, all right? Until the 31st of December, all right? But from the 24th of December up to the end of the year, this is what we call the holiday times. And sometimes the market will open for a short while, will open for few hours, will close at different times, okay? And there are a lot of things going on. So how one can trade in December, okay? Like a professional traders, what do we need to pay attention to avoid common trading a mistake in the month of December, all right? So the first thing that we need to pay attention to, okay, a year is about to close. So what do we need to do? When you are trading in the month of December, you must pay attention to the yearly chart. All right? Very, very, very important, okay? Very, very important. So I'm looking at the Euro USD here, all right? So this strategy is valid for stock, for commodity, for futures, for all financial instruments, okay? So I'm looking at Euro USD, talking about 4 eyes. I'm looking at the yearly chart. So in the month of December, it is critical for traders to know the key levels on the yearly chart. All right? Very, very important, all right? So you want to know where are the key levels. Where are the key levels? The key levels are the high, the low, the opening, and the closing price. Okay, so you can draw them. So the previous year, all this, you see this candle are all yearly chart, and you see the price is here now. So the question you want to ask you now, what is, the current key level we must watch. Looking at this chart here, there's one here, you see this year here. Moment please, I don't want the video to be too long, so I'm under pressure a bit, okay? This is the year 2009, and you see the low of this candle. The price is not too far away from that low. So what we will do, we'll draw that line here. There is another key level here, there's another one here in 2012. The price is not far away from it, okay? So you can see below that, there's another key level. We see this year here, 2010. And the price, the low is also here. These are key levels that professionals are paying attention to up to the end of the year, going all the way to February. Very, very important, the key level. So if you are trading, for instance, Apple stock or Nike stock, you want to go to the yearly chart if you are trading, okay, in the month of December to know those key levels. Because why? A yearly candle is about to close. We can also draw the high, the low, and the median line of the previous year. The previous year is 2013. Now you can see that the price is far away from the range of the previous year. So that strategy will not be useful for us talking about the Euro USD. But we can also draw the high, the low, and the median line of the previous year. If you don't understand anything, you can replay the video, all right, to go through everything that I've said just now, all right? So for the Euro USD, that is because another thing you need to understand that the yearly candle is about to close. The next question is that what was happening throughout the whole year? So for the Euro USD, it has been bearish, okay? Though it's you see this candle here is green, but I can change it now. It's this is not a bullish candle, it's a bearish candle, okay? All right? 1 second, please, all right? It's a bearish candle. I will change the color so you don't get confused. All right. All right. This is a bearish candle. Okay. So for the Euro USD, it has been a bearish year. So you want to ask yourself, what was going on, okay, throughout the year? Very often, if the year has been bearish, there's a high chance that it will close bearish. Because why? It doesn't mean that it will definitely close bearish, but there's a high chance that, okay, the dominant fall will remain bearish because the bear are selling and they don't want to go away. They have a beautiful year and they want the year to finish bearishly. On the other hand, if, for instance, throughout the year, it has been bullish for the financial instrument that we are trading, the bull will be rejoicing in December and will be willing to close the year bullishly. All right. So now we are near the low of 2012. The market, this is not guaranteed. The market will prefer to push it slowly but gradually to retest the low of 2012. This may continue up to the end of February, though we are in December now. Okay, professionals are watching the low of 2012. That low is at the 12042. 12042. All right. Another thing we want to understand when we are trading in December, very often, ladies and gentlemen, from the 23rd of December, which is today, it is better, okay, to just go away and celebrate Christmas and the New Year. So a lot of professional traders will come out of the market from the 23rd of December up to the 2nd of the beginning of the new year. So that's why I posted today on our Facebook page on Google Plus for traders that it's time, it will be wise to hang trading boats up to the 2nd of January 2015. So from the 23rd of December up to the 2nd of the new year, very often a lot of professional traders, okay, will not stay in the market. So they will just come out completely. So don't be the last person. So in December, a lot of professional traders do not trade from the 23rd up to the 2nd, all right? Or even some of them will go out of the market from the mid-December up to the 2nd of January, all right? How do we trade, okay? How to trade in December like a pro? Another thing we need to know, we are watching a yearly chart and we are also watching the quarterly chart. Why? Because a quarterly candle is about to close. So December is so important to us to watch it. A quarterly candle is about to close, a yearly candle is about to close, and also a monthly candle is about to close. So we must watch, okay, the key levels on the quarterly chart, on the yearly chart, on the monthly chart. When we reach the last week of the month, the last week of December, it becomes critical to watch, okay, the last week of the year, to watch the weekly chart, okay. If we are in the last week of December, it is critical for us to watch the weekly chart. But before that, in the whole December, we are watching 3 charts: the yearly chart, the quarterly chart, and the monthly chart, paying attention to the key levels. I want to remove the line that I've already drawn and start drawing some line on the quarterly chart. We want to see how the market was behaving, okay, in this quarter here. You see, this is the quarter of December. So we have, okay, December, November, okay, and October. So October, November, December. So this candle will close on the 31st of December because it's 3-month candle. A quarter is 3-month candle. October, November, December is 1 quarter. This is the last quarter of the year. So we must watch the quarterly chart. I want you to pay attention to some key levels on this quarterly chart, okay? So you see here, the price went up in this quarter, the last quarter of the year 2014, okay, the price went up all the way here. This is the highest point. Watch the key levels on this quarterly chart. Look at this low here. See this candle here? Look at the low of this quarterly candle. That's, you see, also near the low of this candle, all right? The price went back to retest the low of 2011. So knowing these key levels, one wants to make decisions, you want to trade around key level. This is how the professional trading. Attention to the fundamentals, Google Finance, Forex Factory, trading around key levels and implementing the trading drill, the setup, the signal, and the low-risk entry point. One can use just a key level as a setup. Price at a resistance level, price at a key levels, You just go to your entry time frame, watching the reaction of the price. The key support levels, support and resistance level, can give us excellent trade setup, especially the yearly key level, the quarterly key levels. Look at that, beautiful, isn't it? Looking at this last quarter of 2014, the price did open here, yes or no? Look, also the low of this quarter here. This is one quarter in 2011, all right, the first quarter. And this is again another quarter here because I was talking about 2011. It's one quarter in 2011 right here. The first line that I draw. The second line, you see, okay, this is the price did close here, went low, open here. But also, look where this candle did close. This candle did close near the low of this, okay, quarterly candle. The key levels, all right? The market is always, the price also moving from one key level to the next key levels. And we want to know where are the key levels so we can navigate through the markets, okay, as we use Google, okay, you want to use Google Map, you want to know where you are going, okay, and, okay, know, okay, it's like we are driving, we want to know where are the junction, okay, the roundabouts, okay, all right, bend the roads, okay, so we can, okay, adjust accordingly. By using the key level, we can make excellent trading decision. So to trade in December, one must pay attention to the yearly chart, the quarterly chart, and the monthly chart. But when we reach the last week of the month of December, attention to the weekly chart too. Again, on the quarterly chart, we can also draw the high, the low, and the median line of the previous quarter. Now you can see that the price is now out of the range of the last quarter. So for the euro, it's no more useful to apply that strategy. It makes sense? It is also powerful. This is how the professionals are trading in the month of December. So in the month of December, one should not recommend to trade and not to trade the whole month of the December. Sometimes trader will contact me around the 20th of December, and I'm just so quiet because I don't want to talk about trading, and I don't want to, because the reason why I become quiet is just because I don't want to encourage traders to be playing around in the market. But if one wants to trade in the month of December, one must pay attention to the key level on the yearly chart, okay, quarterly chart, and the monthly chart. One can also use, okay, the 6 critical price level. If you do not know what are the 6 critical price level, you will also go to Google and type in trading critical price level, and you will see an article written by myself where I talk about the 6 critical price level: the smart median line, the root smart median line, the dynamic root smart median line, and you want to use them in the month of December. But one thing you want to understand that if okay, the year has been very, very bearish, it's likely to the month of okay, I'm going now to the monthly chart. If the year has been truly bearish, you see for the euro has been bearish, there's a high chance that the last month will also be bearish as it was at the beginning. So it shall be very often for traders to understand the earlier wave. There is usually equality between the first wave and the fifth wave, which is the last emotive wave. The same thing we see very often. The way the year has begun very often will end that way. If the year has been truly bearish, there's a high chance, high probability that it will end also bearish. It's not always like this. Sometimes at the end of the year, you may see a profit taking, all right, which means the price goes down, by December, it bounces up. All right, or price goes up, and in December, okay, people take profit and they pull back a bit. But very often, because the market is saturated, so if it has been bearish, it means that the dominant force has been bearish. The market is saturated by bearish market participants, and they are dominant force. We don't want to discount it. And on the other hand, if the market has been bullish, it means that the market is saturated, so to speak, by the bulls, and we don't want to challenge them. I want to bring on now another currency. The dollar yen, for instance, the dollar yen this year has been bullish. There were a lot of distortion, as I said to traders, but it has been bullish. Okay, you see here. But you can see it opened here. Okay, beginning of the year it was bearish, but you see the tail of this candle. It went back up. Okay, it went back up, which means people bought it here, and it went all the way up here. For me, I'm not interested to be very, very bullish towards the dollar yen because of all the market manipulation going on. But we see an inverted doji here,
So we need to be, okay, we see a doji here now. Okay, it's not an inverted doji, this is a doji here. Next year, we need to watch this one carefully. Again, you can see here it has been bullish. So we want to draw the key level for the dollar yen. Okay, we want to draw the key levels on the yearly chart and pay attention carefully because the dominant force is bullish. But you need to be careful here. Again, though we are talking about technical trading, one will also check the fundamental. So you want to go ahead, play the mind game. Okay, what is happening? What is the policy by the Federal Reserve? Check the economy news relating to the stock that you are trading, the commodity that you are trading. Look ahead, okay, and try to see what is likely to happen. All right? It makes sense? It is also powerful. This is about how to trade in December like a pro. We are on the monthly chart for the dollar yen. Let's go to the yearly chart for the dollar yen. Okay, here we are. You see, it's a bullish year for the dollar yen. Okay, bullish year. All right, very bullish. So there's a high chance that okay, the month of December for the dollar yen, too much distortion going on. Be careful for the dollar yen. That's why I call it the crazy currency pair. All right. So this is the yearly chart. You can see. Okay. All right. So you want to draw the key levels on the yearly chart in the month of December and before you switch to the monthly chart, okay? If you go to the quarterly chart again, here we are, this is the last quarter here, also bullish for the dollar yen, all right? So always at the end of the year in December, draw the key level on the yearly chart and also on the quarterly chart and watch the reaction of the price, okay, in that zone. The point I want to make to you is that very often, if the market has been bullish throughout the year, this is the monthly chart for the dollar yen, it has been bullish for the dollar yen, there's a high chance that this candle will close up bullishly. All right? It makes sense? On the other hand, if the whole year has been bullish, all right, but the month of December, for one reason, has been bearish, you need to go and check the fundamental and see why suddenly at the end of the year, the market sentiment has changed. It means that though the market was saturated by the bull throughout the year, suddenly the bull are taking profit and are running away. So we want to know why suddenly the month of December, okay, is now bearish, has closed bearish. So when it closed on the 31st of December, and at the beginning of the year, we want to see stocks that were bullish throughout the year, but the month of December has become bearish. We want to check the fundamental and see why suddenly the market sentiment has changed. On the other hand, if a financial instrument, for instance, for the Euro USD, has been bearish throughout the year, but the last month of December suddenly closed bullishly, we want to also analyze at the end of the month of December why suddenly the bears that were selling are now taking profit and are running away, and why the market sentiment is changing. All right? It makes sense? It is also powerful. We wish you a very happy Christmas, a happy New Year. I would like to take this opportunity to thank traders that are watching our video on YouTube, that are following us, that are writing to us. Okay, the key point that we want to stress on at the end of this year is that money management. 5% of your trading account, never use more than 20% of your trading account for one sector. So 20% for each sector, but 5% for each sector. So you open 10 trades. The 10 trades that you are trading must not exceed 5% of the 20% that you have allocated for each sector. All right? Money management. If you are not making money, come out to the market, improve your trading, or do something else. Do not continue to lose money because it's your children's money. All right? It's not all about technical trading. As I said, throughout this whole year, we want to combine the technical trading and the fundamental analysis. For trading, we must find first a valid setup before, okay, waiting for the signal and the low risk entry point. The only thing that we are trading is the price. We are not trading indicators. We are not trading anything else. Indicators will give us the warning, but the price will give us a direct signal. When a trader finally understands this thing and start drawing channels, which are the market patterns, all right? The rising channel, the declining channel, and the horizontal channel. We don't want to violate the market pattern, and we are not fighting the market. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Happy New Year and happy Christmas to you, and enjoy yourself. Forget about trading for a while and see you in the next year.